Hello everyone. So the whole point of today is to show you exactly all the details that I keep track of in my journal so I level up my game. This is my secret, is understanding delayed feedback. So when you're in a boxing ring and you're boxing, when you don't have your guard up, you basically get a punch in the face, you instantly know that you made a mistake because you have instant feedback. But having that delayed feedback means that you need to keep track of everything. So in the future, you analyze and you have feedback from what you kept track of. And then you can adjust, tweak your strategy, and be more profitable. Or limit the downside. So you'll start as a loser, you'll limit your losses, you'll start earning money, then you'll increase your profits. So you need to go through this, process. So here I have all my trades. I have 127 trades here, and I have where is it here? 130 percent profit, 40% win rate, 83% compliance rate. Basically, I call that compliance rate because as long as I follow my strategy, I am profitable. And this is what happened here. So no matter what the losses I have, I'm still profitable, and this is the exciting part of it. A loss doesn't mean you're unprofitable. A win doesn't mean you're profitable. It's delayed feedback. It's the compounded result, the total sum of all your trades. Here I keep track of all the pairs. I keep track of the position I took on the pair. I keep track of the period. I keep track of the week in these months. I keep track of the day, the date, because here this is very important because this will allow you to analyze your trades and how the market is behaving each day of the week, but also each day of the week in each quarter. So you have 4 quarters of 3 months every year, and the market doesn't behave the same in each quarter, and this allows you to keep track of that while keeping track of the pairs. That allows you to understand the behavior of that pair or the behavior of market participants that are making the price of these pairs move in a certain dynamic way of, each asset has its own way of behaving depending on the interest they have. The hour is the same thing as tracking the period and the day and the session as well. So London might react differently to the market and make the market move differently than New York. Okay? So that's just an example that when you analyze all of this, if you can identify a period where you have a lot of losses, you may just avoid trading during this period. And where a period where you have a lot of wins, you might just start trading more in this period. So let's say you have 12 trades a week and 6 of your trade are losses, but the common thing between these 6 losses is because you traded outside of a session. So imagine you avoid trading in this session, you're going to take the 6 other profitable trades. So you avoided the losses, right? Which is amazing. So you increase your profit automatically. So the risk, I keep track of the risk because it's very important. As in risk management, you have things you need to keep track of. You need to keep track of the risk, the stop loss, the risk to reward, the result, the final results here, the win rate, and the compliance rate. I'm going to talk about the compliance rate, why it's important. So when you talk about this as a risk, in my whole career, I risk between 0.5 to 1% maximum. Okay, and I don't want to risk more. The reason why I do this is because when I know my risk to reward is 3%, and for example, the pips, the stop loss size I'm using, I can know also the take profit size I'm using automatically. If I have a 5 pip stop loss and a 3 RR, I multiply by 3 and I have 15. I know that I have 15 pips take profit. And in this, I risked 1%, so I'm aiming for 3% reward. Fair? That seems logical, right? However, this also allows me to know the size of the trade that is more profitable, and I should capitalize on that based on the period, based on the confirmations I have all tracked here, based on the asset I'm trading. So everything is correlated, okay? And you should correlate everything. However, for example, trades like, let me find a big trade. This 7RR, where it hit my TP, is good, but more than once when I try to go and hit big rewards or take trades with a big risk to reward, I end up in a loss because the price is not going that far, not because I didn't take the right direction, or I end up break even in the best case scenario when it actually reverses on me. But see, when I keep things fair with logic, okay, for example, 5 here, 4 here, maximum. Here I trade, look, here I try to go too far and it end up in a losing streak. And despite all these losses, when I have, for example, here I have, for example, 1, 2, 3, 4, 5, 6 losses, right? 6 losses. Here I have a win of 3%. So despite the minus 1% losses, in one trade I erased already, I went back to break even. So if I had minus 6, I'm at minus 3. Here again, I tried to go too far. Look at this, 10 RR, 5 RR. And when I keep things fair, 4, 3, 4, I'm able to manage my risk and manage my wins. 4 didn't take the full loss. 3 win, 3 win, 5 win, and there I started getting back to profit, getting into profit, right? So you need to understand this. Now the confirmations are important because this keeps track of what allowed me to take that trade or not take that trade. So when I take the trade and I put it in my journal, here for example, I take all of this and I see what is the common ground between all my wins and what's the common ground between all my losses, which allows me to choose the confirmations that are more accurate and more pushing me into winning a trade, and all the rest I just avoid it. I just don't take it as serious. Here for example, I have 40% risk to reward, which is basically 40% of my trades are wins and 60% are losses. Despite that, because I have a good risk to reward, which is on average 5R, I am able to manage 130% profit, right? And the reason is because I have an 80% compliance rate, and compliance rate is simply executing my strategy exactly how I was supposed to execute my strategy. So 83% of, or 84 if I have to round, 84% of my trades are compliant to my strategy and 20% are not. So imagine here, if I only select, so I filter and I only take the checked. Here 140%. So if I avoid all the losses, all the non-compliant trades, I have less losses, more wins, and here I end up with 10% more profit. Okay, so let me clear this filter, and that's it. And here for example, let's see my checked, my total wins. I have 172% here, And if I just take the unchecked, I have minus 42. So the total is 130. Let's clear that. Okay, great. We can even see here, for example, I manage my trade. So I have manual closes and I have stop losses and take profit when it hits automatically. So if I come here, let's see if we can calculate here. We can count values. Here I have 124, right? So if I filter this and I only take the manual, I have 36 manual closes that I had to manage my risk and my losses. Here I have 49 stop losses and here I have 39 take profits. So it's even. Here 36, here 39, and here 49. So I have more stop losses, but meaning that I knew how to manage my risk when I had these manual clauses that I had to, take action basically on my trades because I needed to manage my risk. So this shows that I managed my risk in the right way because I had manual clauses to secure profit or avoid taking the full loss. And this allowed me to secure this 130%, right? Now this, I added this at the end, around, at the end of this table, so I added it later. The reason why I keep track of the number of pips before the takeoff, number of candles before it takes off, and number of pips further after it hits my take profit is because I want to see when I have a loss, I want to see how long did the trade take before being a win or before being a loss. And I realized that the more time you stay in that trade, if it's an intraday trade most of the time, the longest you stay in that trade, the more chances you have of this trade reversing against you because you're going into a trend. So it should continue into that trend. If it doesn't continue into that trend right away or within a certain period of time, close it, go break even, pay the spread, it's okay, but avoid taking that loss, right? And I keep track of this because when it's a win, I want to know how much profits I'm not taking. So when it takes my TP, I want to know how much further does it go. And here, when it retraces below before taking into profits, I want to know how low did it go so I can manage my risk to reward, my stop loss, and my take profit placements as well. And when I correlate everything in all of these, I am able to basically have a better behavior later, execute my strategy better later with all the small tweaks that I'm making. Now here, win reason, I want to know why I won, and loss reason, I want to know why I lost. Okay, so see, this misread was my issue of not being able to read the things that I wanted to read in a good enough way. And here we basically have all the scenarios. Did I take it live? Did I miss it? And why I missed it, I want to know why I missed it, why I didn't take that trade. And I realized that if I take all my trades, it's fine. I'm still ending up as a win for the simple reason that the risk to reward is fine, the risk management is fine, and the capital management is fine. So if I take all my trades, I end up with 130% profit. I didn't end up with 130% profit. That's my first table in real. I ended up in the total of the live and missed. Now, if I only take that as my first table, if I only take the missed, for example, I end up here with 135% win profit. If I take the live, I'm minus 3% negative. Did you see it? The reason is that I hesitated. So when you open any other or later tables that I created to track my results, I always have live everywhere and I have profit, which shows that I have profit in real. This was my first table, so I wanted to keep track of everything, right? And here I have notes that allows me to keep track of my emotions, what did I do, why I didn't do it, why did I miss it, and all the reasons why. If I have thoughts, I write it as well. I have two other trackers, and these trackers are basically um, a summary of the big table that I have, and this allows me to how much did I hold to ease how I read my how I analyze and read my table. Profitability percentage, holding time, how long did I hold the trade for, if it's a win, if it's a loss, and the size of my SL and my TP, right? So this is very important as a table. And overall profitability tracker, number of trades per day, number of trades per week, profitability percentage per day, profitability percentage per week, right? So I did this at the very end of the table, and then I created a new one to continue my journey, because I act in basically challenges, and the more I have challenges, the more happy I am. So I break my tables only for challenges, and when I hit, for example, my target, I change table. If I have 5% or 10% target, I'm gonna create a whole new ecosystem, a whole new table to keep track of the trades during that challenge of hitting 10%, and then I'll create another table, right? So this is me, this is all I do, this is my whole work. So um and as you see, success is here now because success is in the journal, success is nowhere else. So apply, keep track of things, and I'll see you in the next video, and I hope that you took notes, because this is so important as a trader. You should keep track of everything. You should be mentally focused, be able to calculate how to increase your profits. Okay? I'll see you on the next one.